and the mighty 590.
The best of both worlds, Rutherfordton.
We're on the air. That is the International Morse Code Signal. That marks the beginning of my program, Gilbert Talks Taxes, because, as we all know, taxation with representation has not been such a good idea. And we are here live at the WCAB studios this 23rd day of September. My engineer this morning, the ever-cheerful Tom. Good morning, Tom. And you are ever-cheerful, I can tell. Yeah. Grandpa Tom. Good morning, everybody. I'm so glad y'all could tune in with me. We have been working late. We've been burning the midnight oil, burning the candle at two ends. We've got a deadline coming up. That deadline is October 15th. For those of you that have not filed your 2022 Form 1040 tax return or your 2022 Form 1120, your corporate tax return, you have until October 15th. The clock is ticking on you. And why can I do a program called Gilbert Talks Taxes, Tom? Because I'm an enrolled agent. An enrolled agent is a person permitted to practice before the Internal Revenue Service. Taxes is what I do. Taxation and investments is my niche. It's what I focus on. I focus on the tax implications of investments. We prepare tax returns for people and for businesses, for individuals, for not-for-profits. We do a lot of taxes, Tom. I'm just looking over my notes here. There are so many things I want to talk about. I'm going to talk about inflation today and what's happening with inflation and taxes, because the IRS just issued a notice, and there are a lot of people very concerned about the impact, because we have this thing called bracket creep. Bracket creep. That means you're creeping up the bracket. When you make more money, what happens when you make more money? You pay more taxes, and people are going to be shocked. And you remember when I talked about it a few years ago, when I made some warnings, and it was I told people, you're going to be getting smaller refunds. And everybody started calling me going, we're getting a smaller refund. I'm like, yes, that's exactly what happened. So I'm going to talk about inflation and wage increases. I'm going to talk a little bit about child tax credits. And you and I were just talking before when we were off the air about Vietnam, Agent Orange. I've actually had people ask me about these veterans payments. Are they taxable? Going to talk about that real quick, but let me give my information out. Again, my name is Gilbert Carmona. I have two offices. I have one in Forest City, 704 Oak Street, Forest City, right next to Big Dave's Fish Camp. They're the former Carter Bank building. And I have another office in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. One telephone number gets you an appointment at either office, and that telephone number is 828-289-9300. Again, 828-289-9300. And let me go back over here. Well, let me talk about it, since I was going to talk about it at the end, but since we're on it right now, this topic is, you brought it up, and I have had several clients that have gotten these, it's mostly Vietnam War veterans that are getting this payout. And if you need any information, so if you know a Vietnam, let me start with this way. If you know a Vietnam War veteran who was in Vietnam from November 1st, 1965 to April 30th, 1975, that are having health issues that may be the result of exposure to Agent Orange. Okay, Agent Orange, for people that don't know, was is it plural or singular? A herbicide? Herbicide? I guess it depends what side of the pond you're from.
Defoliant.
It was a defoliant.
Yeah.
What people don't know is that Agent Orange was just one of many. They actually were called the rainbow herbicides or herbicides. Let's decide how are we going to say it. We're Americans. We're going to say herbicide. they rainbow herbicide. So there was Agent Green, there was Agent Yellow, there was Agent Blue, and there was Agent Orange. And what the color meant, and you veterans out there don't, I was not in Vietnam, okay? I missed it by about 6 years. So don't, if I say something wrong, please don't blow up the phone line. So these literally looked like bombs, and they were filled with chemicals, and the planes would fly overhead and they would drop these bombs, and they would explode, and they would spray the chemical all over the trees. So the canisters, they look just like bombs, were painted the color of whatever the herbicide that was in it. So that's why they use these colors instead of using numbers like they would normally do in the military. So they called them Agent Green, Agent Orange, Agent Blue. There was a whole rainbow of them. Agent Orange was the worst one, by far the most concentrated. I remember a Vietnam veteran telling me a story that they all went to sleep. They just, it got dark, and they hunkered down in the woods, and it was in the jungle. And when they woke up, all the leaves were gone. Like, as far as he could see, the leaves were gone. They had done it at night while these guys were sleeping, and he was literally just wet from whatever, which he said wasn't that unusual because the dew's very thick in the forest, so it wasn't like that woke them up. But he said they were wet. It was an oily chemical, and he said it was really something. So guys that literally slept in this stuff now are having all these health issues, and the list is long. So the government is finally, how many years later? 50 years later? Yeah. Finally giving them some money. 50, 60 years later for some of these guys. And the question I've been getting, is this money taxable? The answer is no. This is compensatory. It is to reimburse you for these health conditions you're now having. So the money is not taxable. And some people were concerned and were asking because I guess some people are getting quite a bit of money because these are lump sum distributions. So they've been getting them. But if you know a veteran that has not applied for these benefits, the VA website is probably a good place to start. Somebody told me they got a lawyer. There are lawyers, good, reputable lawyers that are specializing in this, and they're doing these things on, they're getting their money in the back end. When you get your money, they get their money. Because a lot of these guys don't have any money. I mean, they're older now, and a lot of them are retired. They're not working. They're, living on pensions and Social Security. So to hire a lawyer, but there are lawyers that are doing this. But you can go to the VA website, which is va.gov. Remember, government website, G-O-V. If it's not a government website, it's a scam. va.gov. Go there and look it up. Vietnam War veteran health issues. And there's a lot of information there. I recommend you do it. I know I've been getting phone calls, and I've spoken with several people that have gotten these benefits. It's been going on for a few years now. It's nothing new, but there are people that haven't done it or are still waiting. So the big point there I wanted to make is no, it is not taxable. And when I was researching it, because I was curious, is it taxable? It just goes on and on and on. I mean, it's really, the details about this are pretty deep. Now, some people are opting for some compensation is tax-free monthly payments, but there is a back end. Anyway, it's very complicated, and I'm not going to speak to it because I really don't know all the details. All I can tell you is this: it's not taxable. And God bless all of you. You deserve it. You did a lot, and it's a shame that the government didn't step up sooner, like 50 years sooner. But then, they didn't know. I mean, you on the one side of it, they really didn't know. I mean, we were an industrial country. We had an industrial revolution. I mean, people were swimming in this stuff. Yeah. I mean, can you imagine? And these things were not invented, as you said earlier. Did somebody tell you they were going to use it in Korea, or you had heard they were going to use it in Korea, but they didn't?
They talked about it, but it never happened, thank goodness.
Yeah, because that was the Korea. I mean, that would have been a whole other group of men. a lot of those guys had just come out of World War II, or were still in the service from World War II, like they didn't go through enough there. Uh, now they had to do that in Korea. But these chemicals have been around for a long time. This isn't anything new, like it wasn't invented in the 60s and the 70s. Agent Green was in the early 60s. Again, I don't want to go off on the subject of that. I just wanted to talk about that point. Okay, so let's talk about, what time is it? Oh, 10 after. Boy, time just goes by. Again, the program is Gilbert Talks Taxes. So let's talk about some taxes. Inflation and wage increases. So there's a concern right now. I'm concerned. I don't know if anybody else is concerned, but I'm concerned. If anybody hasn't noticed, we've got inflation. Have you noticed, Tom?
Yeah.
We've got inflation. Yeah, the largest, we just had the largest inflation adjustment for individual taxes in decades, 7.1% for tax year 2023. So we're adjusting. We're adjusting. I mean, it's everywhere you go. And I think, get me going. I think 7.1 doesn't even scratch the surface, because you've got several things going on. You've got not just prices going up, but now you're having the cost of doing business has gone up so much. You've been to restaurants and really all stores. When you go to pay with a debit card, what are they telling you now? Oh, there's a 2% or 3% charge for using a debit card. Before, companies would absorb that. We're charging it. We did it for years. We didn't charge it because it was just in our pricing structure. And okay, we've got credit card fees and all that, and it's just a cost of doing business. Not anymore. Now people are putting it on the front end. And if you pay with cash, there is no charge. So what's happening? There's a flight back to cash. And that's why I think banks are offering so much money for CDs. If you've noticed, CDs, short-term CDs, 9 month, 6 month, 7 month, 9 month CDs are paying just ridiculously high rates. Why? I think banks are looking for short-term liquidity because I don't have numbers, and I don't want to go off on that subject, but we've had inflation go up. 7.1% is the official number. I really think it's more like 15%, 16%, but hey, that's me. You remember in the 80s, Tom? We remember the 80s. Leisure suits, blow-dried hair, and 13% inflation. The annual inflation for 1982, the annual inflation, 13%. I mean, gasoline went from like 30 cents to $1, and it seemed like overnight. Everything, all the normal things that you were getting went up. Salaries were very, very low. $3-4 an hour was the norm. Waitresses made 95 cents an hour, plus tips, of course. So they combated that with a lot of things. They passed an Economic Recovery Act of 1981 that was supposed to level that. They called inflation the hidden tax, and it is a hidden tax. So here we are again. People are worried. This is the highest inflation adjustment since 1981 that we just had. And what happens is this thing called bracket creep, because as incomes increase, tax brackets don't. They're set at fixed dollar levels, and they're not being indexed for inflation. And this is what happened a couple of years ago when we started seeing wages increase, especially with the pandemic. And I was telling people, now back then the concern was tax credits. And that's what I was really talking about back then, especially, two-income families with children. And I was on the radio. It felt like I was saying it I did say it every radio program for like 8 months. I was telling everybody, it's not going to be business as usual when you go do your tax return. It's not going to be the same. if you're used to getting, and I'm going to make up a number, you're used to getting $5,000 refund, you might only get a $2,000 refund because you had people that were making, you had a double income family, husband, wife, both are working full-time jobs. Husband was maybe making, and I'm just again making up some numbers here. Husband was maybe making $30,000 a year. Wife was maybe making $25,000 a year. They were $55,000. They were getting the maximum after standard deduction and all that. They were getting the maximum child tax credits. They were getting earned income tax credit. Well, then wages started to go up, and now the same job for the man was paying $45,000, and it continues to happen. Well, the brackets didn't move. So people were phasing out. That means you were making too much money for these credits. And I remember, and we saw it coming, and we warned people, and some people did listen. And the other thing is, people were not withholding enough. So I was telling them, watch your withholding, and especially they would have children that would be over, they'd start getting up over the age of 16, over the age of 18. They're not going to be going to college, so you can't claim them for earned income tax credit. But at work on their W-4s, they still had 3 children or 4 children. When now at home they only have 1 child, 2 child. So people that were getting refunds were actually owing money. That was like, oh yeah, we got the box of tissues out more than once in the office over this. And so I'm worried this is going to start happening again. I'm just worried. So I'm just giving everybody a heads up. So what do? Just be aware of it, really. Make sure your withholding where you work is accurate. Now, there's no guidelines I can give you there. You need to talk to your HR people and get a new W-4, get a new NC-4, and just look at it, because those have changed. I mean, I know I had one last year. They owed money, and they always got a refund. It's the story you always hear. That can't be right. I owe it. They had the same jobs. And I said, well, what's changed? Well, the children have moved out, this, that, the other thing. And he went to his where he worked, and he had not changed his W-4 in like 15 years, 16 years. Something like that. They were still, they were babies then. They're not babies anymore. Now they're having babies. The babies are having babies, and you need to change that. So, it's a substantial difference, and it can be the difference between getting back a couple of thousand and owing a couple of thousand. And it's not that they can't afford it or they didn't have it, the money. It's just that it's a blind side. It's like it hits you from behind. And they're like, oh, yeah, they come and do their taxes in March. And, oh, wait a minute, and this is due when? It's due in like 2 weeks. Yeah, surprise. So that's why I'm going to start, blowing the trumpet now about this, because I'm concerned about this high inflation rate. I'm concerned about bracket creep. And if you're waiting for the government to adjust the tax tables to accommodate this, don't. They're not. By the time they address this, it'll be a couple of years. We still have AMT brackets that haven't been. AMT, by the way, is alternative minimum tax, which that's for higher income people. Typically it only affects real high net earners or business people. It's an attempt to level the playing field, so they came up with an alternative minimum tax, where if you're in certain tax brackets, you're going to pay this minimum tax. Those brackets haven't been adjusted in, I don't know. I've got to say over a decade, maybe even 2 decades. And that was the one thing when the Tax Cuts and Jobs Act, Donald Trump's thing, which was a great tax package. But there were 2 things in there that I was really, and I was upset. I talked about it on the radio. 2 things I was upset about. They haven't raised the teacher's deduction, the $250 deduction that teachers get. They haven't raised that, Tom, in probably 20 years. $250, teachers get a whopping deduction. It's not a credit, it's a deduction. So if you're in a 20% tax bracket, you get a whole $50 break for school supplies that teachers buy, because teachers buy school supplies. It's been $250 since 2006, 5, 4. I'm going to look that up for next week. When did that? 200. So that should be like $1,000. I've had teachers tell me they spend $1,500, $1,800, $1,200, and one teacher told me that's just to get the minimum stuff. She said, if I want to do a project that that I have to pay for the supplies, she said I could spend $500 on just a project that I want to do, especially with the older children, where you've got some more art supplies and stuff. So that was one, and the other thing was the AMT tax brackets. They didn't touch them in that whole bill, and those of us in the tax preparer community were screaming, change those brackets. So we're worried. I don't have any answers for you, like to give you a course of action. I just want people to be aware, especially if you got a big old raise or an increase. Let me just say it this way: an increase in your income because your income was inflation adjusted. This is going to happen. You know who this is really going to get? California just raised the minimum wage to $20 an hour. In California, $20 an hour, minimum wage for any job. Businesses are leaving California literally by the truckload. They're bailing out. The cost of doing business there is just ridiculous. So you're having people that are having these big increases in their salaries. But they're not going to be changing their withholding. And those are the people like that. So if you've had a big increase, please check with your HR department, check your withholding, make sure, because you don't want to get hit later with it. The value of the dollar is disappearing enough. Tom, 8:22. Let's go ahead and take a quick break here so I can get a drink of water. I'm going to come back, talk a little bit about tax credits. Really, nothing's changing there, but I just want to hit a few things there. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
The United States has the highest rate of incarceration in the world. At the Equal Justice Initiative, we believe mass incarceration has to end. There is this presumption of dangerousness and guilt that gets assigned to black and brown people. We have to confront our history of racial injustice and commit to a new era of truth. There's something better waiting for us, something that feels more like freedom. Truth can inspire change. Please learn more at eji.org.
Being a teenager is tough.
There's the constant pressure to be liked,
Endless worrying about college.
cyberbullying, high expectations, all the negativity.
There's no question. Being a teenager is tough. And what do North Carolina's teens do when they want to block out the noise and clear their heads?
We play!
Research shows that teenagers who participate in high school sports have lower stress levels, more confidence, and greater self-esteem. And then there's the biggest benefit of all.
High school sports are fun.
Not just fun.
They're a lot of fun.
Encourage your teenagers to participate in a sport or activity when they go to high school. They'll stress less and smile more. And they'll be laying the foundation for a happier, healthier future.
This message presented by the North Carolina High School Athletic Association and the North Carolina Athletic Directors Association.
Oh, we are back. WCAB, AM 590, FM 100.9. This is Gilbert Talks Taxes. I am Gilbert Carmona. I am an enrolled agent, a person permitted to practice before the IRS. I have 2 offices. I'm going to give the addresses again: 704 Oak Street, Forest City, North Carolina, right next to Big Dave's Fish Camp and the former Carter Bank building. The one in Tryon is 226 South Trade Street, Tryon, the beautiful Art Deco building, right off the historic downtown Tryon. Did you tell me that you drove by and saw my building? Was that you? Somebody told me they drove by the other day. I said, you should have stopped in. We were there. One phone call gets you an appointment at either office, 828-289-9300, 828-289-9300. I haven't welcomed those of you live streaming that call me and tell me they picked this up on the live stream. at www.wcab59.com. And of course, you can go to gilberttalkstaxes.com, and I have the audio of this program and all programs. I think Emily's got us going all the way back to the beginning of time. I think we're caught up. It's 100 plus programs.
Yeah.
I actually did my 100th program not that long ago. Emily's been diligently working on those, getting them up there on the podcast, talking about stuff. I need to go back and listen to some of those old ones. Tom, be interesting to see some of the predictions that I made and what all happened with them. I wanted to quickly talk about child tax credits. The reason most people care about tax returns is child tax credits. Am I going to get a refund? Am I going to get a refund, and how much? The sad news is I don't see any changes happening there. There's no talk. So we were at the IRS forum in Orlando the end of August. We were they have them, they're national, and they have them DC, San Diego, Atlanta, Orlando, and somewhere else. They had another one somewhere. I want to say Las Vegas, but it might be New Orleans. So they have these tax forums. It's a 3-day event, and top IRS people come and speak on topics. Usually it's department heads of the various departments will come. There was a keynote speaker, and of course our girl, Erin Collins, taxpayer advocate, was there. She spoke, had a great time, actually met her. I had some time to talk to her. She was at they had a booth there, actually, at the vendor center. They had a booth. Taxpayer advocates are great. They're not part of the IRS. They're actually, technically, they're outside the IRS. They were created by Congress to kind of be the overseer of things that happen at the IRS, and they come back and snitch to Congress about what's going on. And she is the taxpayer advocate. She's the head of it. She's been doing a great job. I think she's been doing a great job. She is definitely our kind of girl. She tells it like it is. So we were at the tax forum, and I was able to talk to some IRS employees asking about child tax credits. Nothing on the radar. Nothing that they're aware of. The only talk of increasing earned income tax credit and child tax credit, the only talk is some congressmen are trying to float a bill for increasing the payments, but they want to connect it to work. So, which the earned income tax credit you get only for having earned income. So I haven't heard exactly what the scheme is, but they're talking about they want to somehow get that child tax credit to work that way also. Because the view right now is that a lot of people are sitting at home, not working. They've just left the workplace. I don't know why, because salaries are at an all-time high, but again, inflation's at an all-time high. So that's the only talk. So basically, 2023, those are the taxes we're going to file next year now, not the ones that we're filing for last year, but the ones we're going to do this upcoming year. 2023 child tax credit is $2,000, pretty much what it's been. Qualifying dependent under the age of 17. So the year they turn 17, you lose that credit. Okay, so it's under the age of 17. And if they turn 17 at any part in the year, you lose that credit. So, and that credit goes away. It's not phased out. It disappears. It phases out if your income is over $400,000 for married filing jointly, $200,000 for single filers, which we used to think $100,000, a couple making $100,000 was a lot of money. It's the norm now. I mean, and I'm not even talking about professionals. I'm talking about people who just have jobs. You know, to be making, for a married couple, if they're both making 20 anything an hour, if they're making $20 an hour and they're working full time, they're making $85,000 a year. that couple. So, I mean, that's doubled in just a few years. And that's going to continue to go up. Part of that is refundable. There's a $1,600 portion of it that's refundable, and that just goes in the way it's calculated. So that's going to be the same. And for those of you that are unfamiliar with child tax credit, there is a 7-part test. There has to be a relationship there. They have to be a son, daughter, stepchild, foster child, brother, sister, half-brother, half-sister, stepbrother, stepsister, and grand and descendants, any descendants, so grandchildren count. There's got to be a dependent status. That child person has to be a dependent. They have to live with you at least half the year, and you have to provide at least half of that support. There's the financial support. Everybody's got to be a U.S. citizen or a U.S. national or a U.S. resident alien, and they have to have a valid Social Security number. The income now, and this is the part, there is an income requirement, but it's not tied to the amount of money other than it phases out over a certain amount. So they're talking about this, tying it somehow to employment. This would be interesting. Then there's the additional child tax credit, which is the additional $500, the additional child tax credit. Now, earned income tax credit, that's pretty much the same too. If you have no qualifying children, but you make, you're a low income earner for whatever reason, you can actually get earned income tax credit of $600. One child is $3,900 maximum. Now these are maximum amounts, because I've got people, I'll tell them, oh, your earned income tax credit was $2,000. They'll say, well, no, it's supposed to be $3,995. Well, no, that's the maximum amount depending on how much income you had. It moves. It's a moving target. The maximum for one child's $3,900, $3,995 to be exact, Tom. 2 qualifying children, and see, it doesn't double. It's a strange formula. 2 qualifying children, it's $6,604. Don't forget that $4. 3 or more, so 3 or more, the maximum you're going to get is $7,430, which doesn't make sense because it should really be more like $9,000 or $10,000. Again, I don't think the government is going to be doing anything to change this at all. And the difference between earned income tax credit and child tax credit with the ages, everything else is pretty much the same. The residency, the relationship, Social Security number, they have to be a dependent, marital status, all that stuff is pretty much the same. You have to have a Social Security number. The child has to have a Social Security number. But the only thing that's a little different is the ages. That is important because people say, oh, my child's too old. I'll say, no. If the child's under the age of 19, again, the year they turn 19, that goes away. Or they're a full-time student under the age of 24. Okay? Under the age of 24. They can claim this. They have to be younger than you or the spouse claiming the credit too, by the way, unless the child is permanently and totally disabled, then there is no age requirement. So this is a permanent credit for a person that is permanently and totally disabled. So we're not seeing any changes here, and it ties back to what I was saying earlier about the inflation, and double check with your HR department if you're an employer. If you're employed, W-2 employed, check and make sure that you've got the proper dependents on there, the proper numbers on there. North Carolina especially, because they've got a little formula you got to go through. You don't want to come up short at tax season with this. Anything else I want to say about that, Tom? Yeah, I'm asking you. You've been listening to this program for 10 years, Tom. You should be as good about this as me. I'm just trying to see. I don't want to miss any. There's a lot of points in this, and I don't want to lose the people because you can take a deep dive into this. It's just gonna be. It's gonna be interesting to see what happens this coming year because we've got so many things happening, and it's the perfect storm where this thing could go bad really fast. It's the perfect storm where if inflation keeps going up, unemployment, that's another question I've been having people ask me. There was some confusion because for 1 year, unemployment was not taxable. Well, $10,500. I forget now what it even was. It was $10,900, $10,500. The first 10,000 and change, the IRS decided to make it tax-free because of COVID and the lockdowns, and people collected unemployment, and they were pretty much giving it to everybody. Anybody that could fog a mirror was getting unemployment. And then, so people were confused about that, and I've had people say, oh, my place closed, I'm unemployment, but it's tax-free. Or how much of it's tax-free? I'm like, none of it's tax-free. Unemployment is taxable. And the other thing we're seeing a lot of is the healthcare marketplace is still a thing. And when you buy healthcare insurance, please ask your employer, or I'm sorry, not your employer, ask your insurance agent, did you get this healthcare coverage for me on the marketplace? Am I being subsidized? Because a lot of people, they don't tell them that. You go to the agent, you go, I need health insurance, and he comes back and he says, oh, I got a great plan for you. I got a Blue Cross Blue Shield or Aetna or whatever the company is, policy for you. It's really good, and you're going to be paying $200 a month or whatever the number is, $100 a month, whatever. And people are like, okay, great, I can afford that. Well, the reason you can afford it is because you're subsidized. Actually, it's more like $400 a month. You're being subsidized. And they don't know that. So when I file the tax return, we've had a lot of these, it gets rejected. And it gets rejected because the 1095A is not on there with all that healthcare information. And I call the people up, and this is a conversation that happens too often. I call the people up and I say, it got rejected because you had healthcare.gov. And they go, what's that? Obamacare. I don't have Obamacare because we still call it that, even though we're not supposed to. It's the Affordable Health Care Act, whatever. I didn't have Obamacare. I've got Blue Cross Blue Shield. Right. The IRS says you had it. Okay? The IRS says you had it. You had it. And then we pick up the phone because you can call healthcare.gov. You go there, and there's a telephone number. They answer it. They actually answer it 24/7. I was really surprised. It's a government agency that works on Saturdays and Sundays. Is that not? Anyway, but because it's state, it involves the states. That's why. So, and then so somebody will answer, and they will. They may try not to, but if you have a blank one in front of you, they will give you the numbers that go into little boxes. There's 3 columns, all 12 months, and you put these numbers in. And you see the look on people's face in my office when the person is telling them, yes, you had it. Yes, here's your numbers. And they're like, I didn't know. The other thing we're seeing happen is people cancel it, and guess what happens, Tom? It didn't get canceled. You need to confirm, double check, and make sure you canceled it. And people that cancel it and find out they still have it say, but I didn't pay for it. They don't care. It doesn't matter. You're so heavily subsidized, most people wouldn't even know if they were paying for it or not. I mean, I've seen people pay $95 a month for these policies. Anyway, so that's still coming up. That's still a thing. And if you do have it, or when you get it, ask your, because we're coming up. Are we coming up, or are we in open enrollment? When is open enrollment coming up? Make sure that, ask your agent if I have this. It's open enrollment is actually coming up here really soon. So when that happens, I'm trying to look at the date real quick. When is the open enrollment period? I thought it was October. I thought it was October, November, or through the November. Yeah. So typically it's November 1st through January 15th is open enrollment. I haven't seen the specific dates for this year, but those are typically the dates. So we're coming up to open enrollment. So be sure that you ask them, is this subsidized health care? Let's go ahead and take our last little break, and we're going to come back and talk about, I don't know yet. There's about 5 things I want to talk about. I really want to talk about end of the year tax planning and investments. I think I'm going to go in that direction. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
Are you maxed out on your credit cards? When your statements come in, do you struggle to pay them? Are those minimum payments not so minimum? Well, there are solutions. We can help you. You could reduce your credit card's payments by up to 50% and stop all those pesky fees. Plus, reduce all your payments to one that you can afford. If you have credit card debt and you need help, please call our special debt hotline number right now for a complimentary, free, and confidential 15-minute consultation. Deal with your credit card problem now before it gets worse and put more money back in your own pocket for a change. Trust me, we make it very simple. Call debt.com today. 800-810-1569. 800-810-1569. 800-810-1569. Or for your free self-help debt guide, text the keyword debt to 866-371-0180.
You do amazing things every day. And we're not just talking about your pregnancy. You do it all. So why risk letting COVID-19 stop you? COVID-19 vaccines are especially important during pregnancy. Take control of your health so you can keep showing up for the ones you love. Get the COVID-19 vaccine to protect yourself and your pregnancy. It's safe, proven, effective. You could say it's pretty amazing, just like you. Message brought to you by the American College of Obstetricians and Gynecologists. Visit acop.org/COVID vaccine to learn more.
This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. I am Gilbert Carmona. I am an enrolled agent. I prepare tax returns, and we are preparing tax returns right now. So this is the second wave of tax season, and we are coming up to the end of it. The deadline for filing your 2022 tax return is October 15th. Now, this year, October 15th, and that is if you filed an extension. If you did not file an extension, it's a very bad thing. If you didn't file an extension, you're already late. You were due back in April 15th. So that's already in the rearview mirror. But if you filed an extension, you have till October 15th. Now remember that an extension to file is not an extension to pay. So if you do owe money, you're going to owe a little interest and a little penalty maybe. It's not the worst thing, the failure to pay estimated tax payments. It's not as big, but the interest adds up pretty quick. So the money is due with that tax return. Now, so that's the next big deadline, October 15th. Now, October 15th is on a Sunday. The IRS is shut down on Sunday, so it is Monday, October 16th this year. We have till the end of the day to file all those tax returns. Now, I have people that genuinely, they're not just the usual procrastinating crowd that comes in. They're the ones that are going to call me next week. What's that deadline again? It's been the same every year for the last 20 years that I've been doing your taxes, okay? It hasn't changed, okay? We have that crowd, and that's just the way they are. You remember that one year the government extended it till June. The one guy called me up and he goes, finally, the government's on my schedule. There's just people, that's their schedule. Okay, but there are people that have genuinely had problems. They've been sick. I got a man that was in the hospital for a long time. And, taxes are the last thing on his mind. So, or just things happen. If you don't have everything for your tax return, especially people that have businesses, Schedule Cs, those are usually the ones that, are running late. Failure to file is a big penalty. If you're missing some minor detail, if you're missing something, that's not, don't let that stop you. Get the tax return filed. A lot of times it's forms they can't find, or some like people that worked for businesses that went out of business and now they can't get W-2s or whatever. There's ways to work this stuff. Don't let that hold you up. And if you don't absolutely have everything, at least get the tax return filed. You won't have the failure to file penalty. That's a big penalty. You can always go back and amend. Now, people that were affected by the hurricane that just happened at the end of August, which, by the way, we were in Orlando when that hurricane, at the IRS forum, when that hurricane came by. It was just north of us. We got a lot of wind and a lot of rain. So the IRS did give people extensions till February for people that were impacted by that hurricane. I don't know too many people. That was just northern Florida and Georgia, and it might be part of South Carolina, parts, but it's very specific counties where people were affected. But I don't know of anybody probably in our immediate listening audience. I don't know of anybody. So October 16th is going to be a hard date for most people that are listening to me now. Get the tax return filed. If it's something critical and we need to go back and we need to amend, we can do that. We can amend, and especially if it's something that might get you a refund. If you've got your income and we know that we have the big numbers in place and there's a detail, please don't let that hold you up. I've seen people do that. Well, I'm missing this form. Well, it's not a critical form. Let's get the tax return filed. We can regroup on that other form later, or whenever the people are going to get it to you. Also, if you're concerned about, or you can't get your hands on a W-2, something happened, we can pull a transcript. It takes a couple of days because I got to get the form to the IRS and then, log back in and then pull the transcript. So it's not something I can do while you wait. Now, we can call the IRS, but sometimes you're on hold for a very long time. We can get a transcript manually over the phone. You can create an account and you can pull transcripts. We can do that too with ID Verify. So there are 3 ways that we can get transcripts, and we can pull 2022 wage and income transcript, and we can see where you're at. If you're missing a W-2, you're missing a 1099, you're worried about 1099 miscellaneous income that you didn't get, so that is an option. Now, if W-2s that are missing, if you had an employer close, which has happened, especially with COVID, there were employers that closed and didn't reopen. And you know what happened, Tom? They didn't file W-3s. They didn't file, so people didn't get W-2s. There is a workaround for that. There's a form. I need your last pay stub, but people in this digital age don't have pay stubs. Yeah, you know about that. Yeah, they don't have them. Do you get a pay stub? No. The worst one is, do you get a pay stub? Yeah, I just throw them things out. You throw them out. There's a reason they mailed them to you. Now, if it's in an email, you can retrieve them that way. I need the last pay stub. And unfortunately, one of the things that happens, which I think is just wrong. So one of the things that happens is an employer has a payroll service. Whatever, there's hundreds of them. So I'm not going to pick anyone specific. Most of them work this way. They have a payroll service. They go out of business. They're no longer paying this payroll service. So you as an employee have log on. You can log on and you can pull your W-2s. You can pull your stuff. Well, what happens when the person goes out of business? The payroll service closes the account. So you as the employee can't log on, can't get your W-2, can't get your history, can't get anything. So I tell people, download them things and save them in real time, because you don't know. Oh, my employer's been around for 20 years. Nothing's going to happen to them. A lot of people said that during COVID. And they closed and did not reopen. A lot of people died and businesses closed. I mean, so we're still seeing the ramifications of some of this stuff. So again, don't let it stop you. The point is, get that tax return filed. You don't want to miss this deadline. You don't want to get hit with a big penalty, and that's a tough one to get waived. That's a real, because some penalties can get waived. That's a tough one, because that's the one they like to use to drive the point home that these deadlines have consequences. So October 16th to file your tax return. Then after October 16th, a minor deadline is November 15th for you not-for-profits. You not-for-profits, you have till November 15th, and I always say it, what's important about you not-for-profits is if you go 3 years without filing a tax return, you could lose your not-for-profit status. So it's very important you file a tax return. Okay, you don't want to miss them. I've told the story of my client that a board, it was a business run by a board, well, it was an entity, not-for-profit, run by a board, and when the board changed, nobody bothered to tell the new board that, oh, by the way, we file a tax return. Because with the new board came a new accountant. Because, you know, somebody always knows somebody that's a really good accountant. So they got rid of the old accountant, got a new accountant, and I don't know what the new accountant was thinking. He didn't, or he asked them, and they said, no, we don't do a tax return, we're not for profit. Well, they lost their 501c3 status. We had to reapply, but it's $600. The application, the 1023, is $600. Now, there is a streamlined easy that's only $125, but it's only $125, but the main one, the big one, the one that most entities will use, is $600. They had to reapply, they had to go through the whole process, and it made them non-compliant for that period. They had actually lost their status, got hit with a $9,000 fine for not filing tax returns. It was a mess. So you don't want to let that happen. That deadline is November 15th. And then, Tom, people say to me, oh, you get to take December off. You get a break. Oh, so after October 16, you guys are going to Hawaii or whatever fantasy vacation place they imagine that I go to. You know, every now and then I'll go down to the coast. Okay, we'll take a break. I tried to broadcast one Saturday morning. I tried to broadcast from the beach. I thought it would be a great idea. Todd was here. We had the whole thing all set up. And for some reason, the seagulls wanted to peck on my microphone. I still, to this day, don't know why. I was swarmed by seagulls on the beach. They were trying to eat my microphone. Oh, you're laughing, Tom. Thank you. I ran to my car, and I ended up broadcasting from my car. And the seagulls were all standing on the beach looking at me like, where did he go? So, anyway, so I tried that one time, but that was like here, okay, the coast of North Carolina, okay. That was like a 1 week break I took. We do not shut down. We are open 12 months out of the year. I drive by these tax prep places that are only open 1 day a week, like a lot of the franchises, H&R Blocks and that. We're open Wednesday from 11 to 2. Like, what? How do they do that? We're 24/7. Again, we do the investments. So after tax season is actually my favorite part of the year because I meet with all you businesses and I meet with all you individuals, and we do what I really like to do, which is tax planning, looking forward, talking about your investments because it's coming up on the end of the year. You business owners, what do we need to do to plan for next year? What do we need to do? You know, let's look at your P&L. And my calendar's already filling up. I'm far from full. I don't want to make it sound like I'm already booked, but we're already booking appointments in November, after the week after Thanksgiving, first week of December, second week of December. We're already booking up appointments, meeting with people, going over these things. It's really what I like to do. And then we start looking at the financials, start looking at insurance policies, reviewing the insurance policies, and then we review the entity, your entity classification. You know, you're a partnership. Why are you a partnership? Why are you not an S corporation? If you're an S corporation, why are you not a C corporation? We can look at these things. Is there a tax advantage for you? I've told the story so many times about the businesses that'll come in and, a partner will pass away or retire, so they come in because now they got to change it. And I'll say, well, why are you a partnership? Looking at their tax return, S corp status might have been better, might not have been better. I don't know. I mean, I'm not saying that one is better over another. They're all different. The answer is, people say, should I be an S corp or a partnership? And I always say it depends. I have a whole list of things that we look at and we go through. I've actually created an entity guide. If anybody wants that entity guide, call my office and tell me you want the entity guide. It pretty much tells you what an LLC is. It tells you what a partnership is. It tells you the differences, advantages, disadvantages. It's pretty interesting. We can have a meeting. We can talk about it. The one company, I said, why are you a partnership? Well, when my father and his brother, and I think there were like two uncles and the grandfather, when they started this business, it was a partnership, and it had literally been a partnership for like 45 years. And when I told the third generation, let's look at this, because I don't see much an advantage to this. I look, and they're like, you mean we can change? Yes, you can change. We can look at it and change. How much time do I have left, Tom? I can't see the clock. 3 minutes? That's an eternity in radio. You can do a lot of damage in 3 minutes.
30 seconds.
You can say a lot of things in 3 minutes. So there's an entity guide that I have, but that's the kind of things we discuss. And then again, we can review investments. And this is the time of the year I want to remind everybody, while you're getting ready to close your books for 2023, while you're getting ready to look at these things, and there's a whole quarter left. We got a quarter left, but something about this last quarter, it goes by fast. I don't know why. I think it's because of the holidays and all the schedules that happens. I mean, Thanksgiving just takes out a whole week. It's gone, right? So you got a whole week in November that's gone, and then you've got a whole week. For some people, it's 9-10 days in December, first couple of days of January that are gone. And I don't know why, but it just makes this fourth quarter disappear. Third quarter will be over next Saturday will be the last Saturday, and then the 30th is the 30th, last day of the month, October 1st, starts the fourth quarter. So we're a week away. There was one other thing I wanted to say about the compliance checks, and that is, and then we start looking at at your incorporations, and we start getting ready for that. Okay, so pretty much I've talked about all of it. One thing I wanted to get into in the minute I've got left is digital currency. Those of you that are investing in digital currency, I know this has kind of fallen off the radar. You're not hearing as much about it. Now, those of you that are in that space and are very active in digital currency, you're very active in it. You know a lot about it. People that aren't, it seems like it's just kind of fallen off, but it hasn't. Okay? It has not. The IRS is still very, very actively pursuing legislation about cryptocurrencies, okay, especially in light of what happened with FTX. And there are people doing creative things, let me say that way. Nothing illegal. They're doing creative things where they're selling their homes and getting the money in cryptocurrency because they want it, whatever. That's just what they're doing. Real estate agents that are getting commissions paid in cryptocurrency. People that are getting paid for their jobs in cryptocurrency. This is all still taxable. And there's this thinking, or it's kind of been put out there, that because it's a cryptocurrency, it's this digital thing, that it's off the radar. It is not off the radar. Okay, and the IRS is bringing it on the radar, and you're going to see 1099-S's. Those of you that buy and sell real estate know what those are. You're going to start seeing 1099-S's for it. The IRS is making it mandatory. wants to make it mandatory. They haven't yet. They're headed in that direction. I will keep you posted on that because this is going to be very important. Okay, we're almost there, Tom?
Yep.
This is Gilbert Talks Taxes. I'll be back next Saturday at 8 a.m. WCAB, AM 590, FM 100.9.
I know your window, and I know it's late. I know you're still